everyone, welcome to Success Legacy. My name is Eve and thank you for tuning in to SL Insights. The mentor we're about to interview today is someone who has opened my eyes to a value investing world. He is the reason why I have a stock trading account and am still earning passive income from it. But before I go on, I need to show this disclaimer, and while that is being shown, if you have any questions to ask, you can ask them on the Q&A box that's right next to our screen, or you can also ask them on the Facebook post that we have just posted. It's facebook.com/successlegacy. So I met Ken and his co-founder Clive in 2010 when I was attending their Millionaire Investor program. And before attending the program, all I knew about the stock market was it was too hard for me. It's only for people who are very rich, or it's for people who are financially smart. All the stories about people going bankrupt, having to lose their fortune overnight, or losing sleep because their money is in the stock market steered me away from it. After attending Millionaire Investor program, I realized that there were many ways to invest in equities, and the way that they taught me certainly did not make me lose any sleep at night. So that brings me to Ken and Clive's company. They started 8 Investment Private Limited in the year 2008 amidst the Lehman Brothers crisis with zero capital. In 6 years, they transformed it into 8i Holdings Limited, a public listed company under the Australian Securities Exchange with an assessed market capitalization of $150 million. Today, 8i Holdings Limited is a highly successful investment and education entity in Singapore, empowering the growth of countless individuals through business, investments, and education, with an aim of creating 100 millionaires by 2020. Ken, a self-made millionaire by age 34, he achieved his dream of financial freedom by applying his unique investment style of value investing from various mentors and modeling investment strategies of Benjamin Graham, Warren Buffett, Peter Lynch, Philip Fisher, and Sir John Templeton. Today, we are very honored to have Mr. Ken Chee here with us to share his humble beginnings, his journey, his thoughts about value investing, and of course, how to invest in 2015. He will also be sharing with us his newly launched book. It's called Value Investing for Beginners. I've read the book. It's very easy to read and very easy to understand, but I'll leave it to him to tell us more about it. So without further ado, let's put our hands together and welcome Mr. Ken Chee. Hello.
Hello.
Sit.
Hi.
Okay, so before we start, there are still people who don't know much about you. So shall we tell them a bit about yourself?
I'm a Singaporean, born and bred in Singapore. Came from a very humble family. Couldn't use English, only started to use English at the age of 15 years old because I have a learning disability. And after that, after NS, went to take my degree and came back. My first 2 jobs, I was retrenched at age 24 years old, very lucky. And after working in a corporate for about 4.5, close to 5 years in the financial industry, I decided to actually hit my callings, which is to become an entrepreneur. At the same time, my passion is actually investing. So I've been investing actually as a retail investor from 2002 all the way to until now today. But in 2008, we decided to start an investment and education company to share with people one of the very powerful investing concepts that we use to actually generate wealth while we sleep. We don't need to look at the stock market.
Correct.
We don't need to look at the chart. Basically, we don't even need to bother about the news. So invest, sleep, and the money just grow and actually have passive income. Just by show of hand, how many of you would love to have that? Thank you very much. If you never raise your hand, then I don't know why lah.
They want to sleep with fear, maybe.
Okay.
I don't know.
Yeah.
Okay, so what inspired you to start 8 Investment, and how did the name come about?
Okay. Very interesting. Actually, the company name 8 Investment. A lot of people think that actually is because of the Chinese tradition. Actually, it started when the name actually go back to remember 8 person. What happened here is I met my good friend and also currently my business partner, and also our one of the co-founders for the company in 2006 in an education program. So after that, then we discover actually we have a common hobby, that is value investing. And back then, a lot of people they love trading. So when you tell tell them about value investing, they'll look at you, huh? You gong me, you know, what are you talking about? So we are the oddball out. So because very lonely, you know, to do value investing if you do it alone. So we say, hey, I said, bro, why don't we come together to form a mastermind group? But if I have to face you every time mastermind, also very boring, right? So what we did was actually we go and find 6 other like-minded individuals coming together, and 8 of us form a mastermind group. And from 2006 to 2008, these 8 of us, every month, once every Saturday, we'll meet from 9 a.m. to 6 p.m. just to study company and actually to read all the books like Warren Buffett book, everything is like a Boy Scout thing, very nerdy one, just read. Then in 2008, when the Lehman Brothers crisis happened, when the stock market crashed, a lot of companies that we analyzed suddenly become undervalued. So when everybody was rushing out from the stock market, actually we were going in. It's like a fireman, very interesting. Everybody run out of the building on fire, right? We're actually the one going in. So our friend actually said, hey, see, how come you guys are going in to buy stock, you know, when everybody actually is getting out? So is that something that you guys know that we do not know? And we thought that actually what is common sense knowledge, actually not too common. So, and they say, could you share your knowledge with us and our friend? So we just form one class with all our close friends. So we just share our knowledge. So from there, it just grew and grew and grew. And today, it become a full-fledged business. So to remember the 8 person, the mastermind group, that's why we call 8 investment.
Oh.
Yeah.
Oh, I didn't know this. This morning, I was telling him that I don't know how 8 investment came about. But
Yeah.
don't tell me. Wait until now, when I ask the question, then you tell me.
Okay.
So that's why I asked this question. So we were talking about you have a book, Value Investing for Beginners.
Yes.
So what can they learn from this book and what can they expect from it?
Okay. Because I have a learning disability since young. So I always tell my teacher, I say, don't give me theory, you know, because you give me theory, I go hungry. Because I'm a very practical person. Because I also came from a very poor background, so I started working at the age of 13 years old. So I discovered actually I have this very interesting ability to actually put something very complex to something very simple. I always say if I cannot explain to my grandmother and to my daughter, then it's too complex already. So this book is written with that mindset in approach that anyone who want to learn about value investing, you pick up this book. At least you should have a basic understanding what is value investing all about. Very simple, in layman language, no jargons. Yeah, and later on I will explain. Also,
Yeah.
you discover actually what you know about investing could be very interesting. Yeah.
It's very different from what you know about investing, is it?
Yeah, very different.
Yeah. So I understand that the book is sold out.
Yeah.
So where can they get the book if they want to?
Okay.
Is it in print? You told me that it's in
Yes,
print.
we printed the first version. We didn't put it in the bookstore. It was sold out because we have a big event 3 months ago. So during the event, we saw most of it. We still have certain copy, but we managed to reserve limited copies to the live audience here, who actually thank you for your time taking part in this session. So we would like to give you as a gift with my authorized signature, autograph, correct? Yeah.
Yay.
And hopefully you can keep long enough.
Free book. So okay, so we were talking about value investing.
Yeah.
What exactly is value investing?
Okay, value investing is in a but before I go, maybe I just highlight this basically this disclaimer.
The disclaimer, he must tell you.
First. This one very important. This one.
Yeah. Listed company must have a lot of disclaimers.
Now, to cut a long story short, so because today I'll be touching one case study. So if you decided after listening to this case study and tomorrow at 9 a.m. you decided to go to a stock exchange and buy this stock, if you make money, it's your credit. Okay, if you don't make money, it's also your credit. So we are not responsible for your gain and losses. What this whole session is actually to present to you a methodology, a process, where how we filter out such company to invest and invest safely and actually make your money. Yeah.
Okay. So why should people start investing?
Okay, so maybe we touch on why should people start investing first. Okay, so a lot of people ask me, say, Ken, why should we invest? Okay, maybe I will show you this to all of you. Then you let me know whether we need to invest or not. So I switch on to Command tab, right?
Yeah.
Okay. Too big already, huh? Wait, let me. Okay.
Yeah.
Better. Okay, good. So now let's do a very quick facts and figures finding for you. So what we are looking here is very simple. In assuming inflation, you all know inflation? Yeah. Anybody do not know inflation? Actually, let me explain inflation. It's like 30 years ago, a cup of coffee is, how much is a cup of coffee?
30 cents, 20.
30 years ago, you can
I don't know. 5 cents. 30 years ago, excuse me.
Anybody? Yes, sir? Yeah, correct. 20 to 30 cents. So how much is a cup of coffee today? Let's say not talk about Starbucks. Let's talk about same the coffee shop. How much is it? $1, $1.10, $1.20. So same cup of coffee, same water, same coffee powder, same sugar, same water, nothing changes. But the price go up. That actually is inflation. That means the purchasing power of our dollar actually erode over time. And it's healthy. That means the economy is growing in a sense. Because if the economy is not growing like Japan, that means the price actually go down or stagnant. That's not good in that sense. So let's say we assume that the Singapore inflation is 3% year to year. Okay? And assuming by the age of 65 years old, okay, that means it's the official retirement age in Singapore. Okay? We don't work. And you want to have a $1,500 cash of today's value to spend. How many want to have a minimum $1,500 cash to spend every month? Can I see a show of hand? I know not enough. I say minimum. Minimum. Okay, minimum. So you want this as the minimum. The question is, how much cash do you need at the age of 65 years old in order to last you for 20 years retirement? That means from 65 to 85. Okay, because the average lifespan of Singaporean is 81.3. Women live longer, fortunately. Okay? So you give me your current age right now, we can calculate straight away at this number, right? How much you need at the age of 65. Anybody want to give me a number? Your age. By the way, ladies, you can ask for your friend.
Not your age,
Okay,
no.
so yeah. 45. Let's not jump so fast first. Start with maybe anybody in 20s? 24. Anybody younger than 24? Okay, cool. So that says 24. So, sir, you need $1.7 million in cash at the age of 65 years old in order to last you for 20 years of retirement spending. Because by then, when at the age of 65 years old, what you need at $1,500 of today's value, you need $5,000 in order to have the spending power of $1,500 today. So give me an age. Anybody? 30s? Anybody? 30s. Yeah, thank you. So you need $1.45 million in cash. Okay, so the next number I won't ask because nobody will volunteer one. Okay, 40s. So you need about $1.08 million in cash. If I actually input 50s, you need about $800,000 in cash. Now bear in mind, this is only for yourself. We're not talking about your spouse. I'm not even talking about your children. Just for yourself. And this provided you have pay off your house and your car loan or mortgage fully. And this provided you are healthier. So if I average out every single one of you in this room in front of you, including you in front of the watching it live right now, my question to you is this. I think it's a fair statement for me to say every one of us in Singapore must be a millionaire in cash in order to retire safely, not comfortably. So if you agree with me, please just raise your hand or you just type in yes in the Facebook. Agree now? So the next question is, if we have established this fact that we need $1 million in cash in order to retire safely, not comfortably, okay, you save every single cent in your paycheck right now. It means you don't buy anything, you don't even travel, you don't even buy clothes, you don't even buy food, When you rain, you drink Sky Juice. Okay? When can you save all the way to $1 million in cash? When? Now, you don't have to answer me this question. You let this question sink all the way to the bottom of your heart. Because most people, if they don't invest in Singapore, if they live in Singapore or in developed country and you don't invest, it's very hard for them to retire. Yeah, and this is one key reason why we need to invest. And also, a lot of people actually tell me, say, Ken, okay, but investing needs a lot of money. How many of you have this thinking? Investment need a lot of money. Be honest. Anybody?
I used to have it.
Need really a lot of money, no. 没有钱 no money, how to invest, right? Okay, how many of you here have $10 in your pocket? Can I see a show of hand? Wow, don't have $10 one, very jialat. Please go to see your MP, he will give you a voucher, NTUC voucher, okay? So now, assuming, how many of you can save $10 every day, and each month you can save $300? Can you? Okay, you're not going hungry, okay? I think if you can save $300, let's take a look. What happens if you actually do this? I create the same spreadsheet Okay, and also highlight to you, now, same thing, assume that inflation at 3% every year, and let's say you save $10 every day, and each month you have $300 to invest. And you invest in something that will actually help you to compound 20% a year. Now, I know what you're thinking. You're saying that, wow, my CPF is only earning me 2.5 to 4%. How on earth can I compound 20%, right? Actually, I cannot save it on live on TV. Actually, you can do a better job than CPF board, okay? So, yeah, I will show you in a while, okay? I'll show you in a while. So, let's put this one side first, how to compound 20%. Let's put one side. Give me your age right now, and we'll see what is the compounding outcome. Anybody? 20s? 26. 26. Thank you. Ladies very quiet today. Yeah, 26.
Ask age, nobody wants to say.
Oh yeah. Ask for your friend, on your friend.
Ask for a friend.
So you see, you will compound. Okay, here interestingly, you will compound actually in excess of $40 million at the age of 65 years old. If you actually spend religiously at a disciplined, prudent approach, $4,700 every month. Okay, for your expenses use. At the age of 85 years old, before you take the last breath, you go and make the maker. Okay, you still have $39 million surplus, left over. Now, you can choose to give this money to charity or give it to your children. But I urge you not to give too much money to your children. Because for me, my philosophy is very simple. If your children is capable, right, they don't need your money. But if your children is not capable, right, giving them too much money will harm them.
Correct.
So I can sense that some of you say, oh, lucky my parents not here today.
Watch live, eh? The parents better not watch them live now,
Yeah. So let's say not 26. Let's say we put 30 years old, right? Your compound actually in excess of $80 million, you have a surplus of $70 million. Let's say we put in at the age of 40. Okay, you still will compound in excess of $2.5 million at a surplus of actually $1.4 million at the age of 85 years old. So, and this is only using $10 a day and $300 a month. So can you imagine if you increase it? So that's the power of actually investing. But of course, the question come back to here is, how on earth can I compound by 20% year to year? Correct, no?
Correct.
That's a very important question. Yeah. So which later I will cover.
They will cover it later. So you used to be a trader, right?
Yes, I used to.
Many years ago.
Many years ago, huh?
Yeah, you used to be a trader. Why value investing?
Okay. Actually, after my O level, I wanted to go to Singapore Poly to take a bioscience because my favorite subject was chemistry. Okay, and interestingly, you see in life, they say that in order to test you whether you can take certain responsibility, they test you more. So I discovered I got partial blindness, color blindness. That means I cannot differentiate certain color, but I can drive. I can drive. So the poly said, hey, you cannot take this course because you colorblind. Wait, you mix the wrong chemical, the whole lab blow up. How? And I say, wow, cannot take bioscience, one of my favorite subjects, then how? I say, hey, we got another subject for you. It's called banking and finance. Very hot subject. So banking and finance, say, my math's not too good, but never mind. As long as you can use calculator, can already. I said, okay lah. So I enrolled in the banking and finance. So that subject actually, I was trained as a trader. They taught us how to trade. So I started off using technical analysis, looking at chart. That was my professional training. But I discovered actually there are two reasons. First reason is I discovered it's not for me. Now, I'm saying that some traders really can make very good money. But I discovered actually 90 to 95% of traders cannot make money consistently. Because no matter what system they use to trade and what process they trade, they can never predict this thing called a black swan. What's called a black swan is a random event that nobody can predict on. But when it happens, you have a dramatic impact on the financial market. Let me give you one example. How many remember there's this incident called September 11, 9/11? You remember? The only guy that knew that was coming way beforehand is by this name called Osama bin Laden. Yeah. Also a millionaire. You're right. Maybe he shot the market first before he asked the crash. You're right. Maybe. But a lot of people lost money. How about this? Some black swan event is natural disaster. How many remember a few years ago there's a Japan tsunami? Can you imagine you are farming on the land? Suddenly in the early morning you look back, right? There's a tidal wave that actually swept across the whole land and suddenly your homeland all destroyed. That disaster alone actually shaved off a certain percent, I think 1% of Japan GDP that year. And a lot of people also lost money. So it's this kind of event, as a trader, very often they get caught. Okay, especially if they leverage, they do margin trading. So very dangerous. So I decided it's not for me. It's not safe for me also. I don't feel safe. And I decided to actually not trade. So after my degree, came back, work in the financial industry, met someone who shared me more about value investing. Then I read, okay, see, because I cannot study last time in school. So, but how do I pass exam? How many want to know?
Yeah, I want to know.
So if your children cannot study, please tell your children this, okay? Don't scold your children, you tell your children to look for the smartest looking person in the class.
Looking only.
Smartest person.
Smartest.
But usually the person who are very smart, they have certain look one.
Okay.
And they usually sit the first row in class one. So basically what I do, it was actually I will go to the person who can study very well. I say, look, I can't study well, right? You can study well. I can play very well. You know, I play basketball, I have fun. Because usually people study a lot, I cannot have fun one. So they're very, studious, I said, you know what? We do a trade I teach you how to play, you teach me how to study.
Wow, very good trade you.
Yeah, very good trade. So the whole idea to me is very simple. I say, if that guy can score, or the girl can score 99 marks in exam, right? If I use a method, at least I can pass what? Correct or not? So that's the whole idea. So in investing, the same thing I ask, who is the richest investor in the world? So if I want to be good investing, or I want to make money from investment, right? Who's the richest investor in the world? Then I discover is this goofy guy. Okay, now he's a grandpa. His name is called Warren Buffett. By the way, it's called Warren Buffett.
Not
with
buffet.
2 T, not Warren Buffet. Okay, that one is imitation made in China. So I study his methodology and I discover, wow, it's a very powerful methodology. Yeah, and I realized a lot of very successful people, they are value investors. Yeah, a lot around the world. In fact, you track back all the world richest people, right? In fact, most of them are value investors.
Yeah. Okay, so is it safe to invest in equities? It's only there's a certain method then it's safe, or?
So actually allow me to rephrase your question is, how risky is it to invest in equity, correct or not?
Correct.
Yeah, a lot of people actually have this thing about risk. So allow me to actually share with you what Warren Buffett said about risk. Okay, risk comes from what you do not know and what you know. The more you know about certain things, the less risk you have. Okay, I give you an example. Let's say you stay at one particular house. Directly across your house, you know your neighbor. Okay, and you know your neighbor, this house, he bought the piece of land for $1 million. He built the house for another $1 million. So the land plus cost is $2 million. And you know the house, not haunted one. Okay, not haunted one. So, and then they interact with the neighbor. They interact. Oh, so Mr. Tan, doing very well. Yeah, okay. Then suddenly Mr. Tan decided to get married. Okay, married to actually, let's say, Australian wife. So then one day Mr. Tan comes and tells you, hey, you know what, Mr. Lim, I decided to migrate to Australia urgently because my wife thinks that Australia weather better. So I want to let go my house quickly. So I'm willing to actually sell now the value here is easily 2.5. But you know what? But I need money urgently. I'm willing to sell for 2 million. So my question is, how many of you, if financially you are able to afford, right, how many of you will be interested to buy the house for 2 million? Can I see a show of hand? Okay. Some of you never raise your hand because you still want to wait for discount to go down. Because you want to wait for divorce. Yeah. Why? Because you know for the fact he bought the land for 1 million. You know for the fact he built the building cost is 1 million. So break-even cost is 2 million. So you know certain things that most of the people who did not stay in the neighborhood that do not know. So your risk is at the lowest. So same for investing equity, which I will explain the concept why to us as value investor, when we know a certain methodology, the risk is very, very low.
Okay.
Yeah.
So you know the fear of me previously when I put my money in the stock market, and I feel fearful that my money may go downwards. If the market crash, then my money is going to be gone, right?
Yeah.
So how do people manage this as a value investor? How do you manage that? When crash that time, then how? Okay,
our concept is actually when it crash, right, we buy more. Yeah. Some of you, I start to see your face that, you crash at time, you should sell it. You should not hold a falling knife, right? Actually, you lead on to the next concept is actually how to invest.
Correct.
Yeah, maybe I will just share with you on this method. Oh, sorry. Wait.
Oh, no, just
Oh,
press
here.
this.
Okay, cool. So how to invest? So the first thing is, when we invest in equity, please, when we buy a stock, right, we're not buying a number, we're not buying a paper, we're not buying a chart indicator. Actually, the first thing is, we must have a business owner mindset. Now, allow me to actually explain to you in this manner. All the stock that listed in any exchanges, there's a business running behind it one. Agree or not? If you agree, say yes lah. Yes. Also, I don't know, I one person like sure. Okay. So okay, now just imagine. I want you to imagine, including you in front of actually watching us live right now. Imagine downstairs, right? There's a nasi lemak store. Or what's the Singapore national cuisine? Chicken rice. Right?
Chicken rice lah.
Chicken. Let's say downstairs got chicken rice store. So right now, if you were to, this chicken rice store is doing very good business. It's a private business. If you had to buy over this business, what kind of question will you ask? Can you give me some of the question you ask? Huh? How much you made? How much you made? Okay, revenue, net profit. Very good. Can you give me a big round of applause? Come on. Thank you. So, how much you make? Come on.
Customer like the chicken rice.
Yeah, customer like the chicken rice now. Every day got how many customers come and queue? And how many repeat customers, correct? And somehow the chicken rice now got loyalty program. Example, come on. What question do you ask? Come on, as the private business, what question will you ask?
The chicken rice nice.
The chicken rice nice now. Is there a secret recipe in the chicken? The way they prepare chicken, or is there a secret recipe in the chili? Maybe they put a bit of heroin, inside. No, I'm just kidding. Sorry, this is the funny side of me. But is that a way that actually they put something in the ingredient that actually is very addictive, that people want to come back and eat more? Yeah. So what else? What else will you ask? Whether the business suffered any losses before. Very good. Okay. How about this? One more. Very important one. When you want to buy a chicken rice business downstairs, what will you ask?
How much you sell a chicken rice?
How much is the rental? What are the costs involved? What else? What is the price of selling? Okay, very good. But that's usually come to the last part. But actually, one very important question is, who is the chef? Is it chef dependent or is it process dependent? Because if you cannot cook the chicken rice, if you sell the store to you, the whole business collapses. But if it's a process dependent, then they can scale this business and replicate this business. That means they can franchise, they can license, you can hire people just follow this process, or they have a central kitchen to supply the garlic, supply all the ingredients, or even supply the chicken. You just need to hand the chicken and chop the chicken already. So you see, all these questions that you just asked, most people do not ask when they buy stock. Because most people, honestly, you ask those people, why you buy that stock? Cheap ma. Because last week $1, now 50 cents ma, cheap. But when you ask them, what do the company do? Oh, the company sell electronic one. Exactly what kind of electronic product? Who is the management? The company last 5 years make money? The company got cash? So they give you all this very interesting, funny look. You see, I discover most people when they'll spend more time doing research, right? When they buy a shampoo than to buy stock. That means you go to supermarket, right? When you want to buy a shampoo, at least you will think, you pick the brand, say this brand. They say, this one, some people very particular, they look at ingredient, natural ingredient. Okay, is this shampoo for dry hair, long hair, curly hair, or no hair? Then the next thing they compare price. So last week this shampoo is selling for $9.90. This week this shampoo having promotion $9.90. I buy one, I get 2 more small bottles for free. So they will do this kind of research, comparison. But when they buy stock, they don't do all this kind of research, no. They just buy. You ask them why they buy, because my broker tell me to buy.
Correct.
Because I see newspaper, they are making good profit, but is the profit sustainable? Don't know. So this is what I mean by you must have a business owner mindset. And having a business owner mindset, right, it will change you from seeing something from a consumer point of view, then you become an entrepreneur point of view. I give you one example. Actually, investing is very fun one. There's a lot of opportunity on the street. A lot of people ask me, how do you look for investment opportunity? It's every day in the life. Every day. I give example. How many of you actually own an Apple phone? iPhone? Samsung? Android phone? Thank you. So I'm not here to tell you whether to buy Samsung or Apple stock. I'm not. Okay, but how about this? You see, all the smartphone, they have one particular ingredient actually is a touch screen. 对吗? Correct?
对.
Have you ever asked yourself who actually supplied this touch screen? It doesn't matter what phone you use. All smartphone right now using touch screen, right? How many agree? How about this? Some of you look at me and say, wow, still cannot get it. Okay. You go back home to your wardrobe. Every morning when you change your clothes, I hope you change your clothes. So when you change your clothes, I can take my last dollar to bet with you. There's something in your wardrobe component. It's called a zipper. Most clothes have. You know zipper? 拉链. You look at the brand, right? I think 4 to 6 zipper out of 10 zipper is this brand called YKK.
Yes.
Correct? Those of you, not because you don't zip one. So, this company is listed in Japan. You know the chip, the potato chip that we like to eat. Sometimes I see people like to eat potato chip. There's a brand called Calbee. Yeah.
Calbee.
Calbee. Sorry. Yeah, Calbee. Yeah, it's listed. How about this? My grandma last time when I fall down, because I'm a very naughty boy, I run around, cut all this thing. Say, lie. Give you this ointment, okay, called Yunnan Baiyao. Listed. China stock. Doing very well. So it's the day-to-day usage of this product and services. You've been using it one. You use it, you consume it, but you never buy the stock.
Because don't know listed.
Sorry?
Because they don't know listed.
Because you don't know it's listed. But now today you go through this, you'll start to see it from a business owner point of view. So next time when you go shopping, right, you see something that's selling very well, don't go and queue and actually buy, You must say, wow, is the company listed? You must ask that question. Or at least you see a product selling very well, you look at the label, manufactured by which company? That give you very good insight of certain things. Yeah. The second thing is, you have to understand this concept called price versus value. So what is this concept? It's very simple. I asked in a very simple manner, since we have some ladies in the house. Ladies, how many of you would love to buy a LV Hermes bag? Is it? It's pronounced Hermes. Right. Hermes. Oh, you are tough. Hermes bag or a Chanel bag for the price of Charles & Keith. Can you see a show of hand?
Of course lah.
Okay.
You're asking
the
the
ladies
obvious.
here very honest. Also, I want to ask gentlemen. Gentlemen, how many of you would love to buy a Ferrari or Lamborghini for the price of Proton? Please come on. You also want, okay? You know why? Because you understood instinctively the difference between price and value. The price that you pay versus the value you're getting back, okay, is much lower. That means you pay a lower price. In other words, we want to buy something worth $1 at only 50 cents. So that is the concept of value investing. But a lot of people actually, when they buy stock or they invest, they only know about the price. Or they only know about the price. They do not know what's the value they are getting out of it. I hope it's a very
easy
simple.
to understand.
Yeah.
Okay. So, okay, with that, right, I want to ask you also. There are friends of mine who say that I cannot take risk one. I put my money in the stock market. Why don't I put my money in a fixed deposit? Can you please tell them? Because I cannot explain to them that why are you putting your money in the fixed deposit?
Okay.
I feel that that's a waste of. Okay. Maybe I shouldn't continue saying that.
Okay.
Yeah, but maybe you can explain.
Okay. There's nothing wrong putting in a fixed deposit if the interest rate give you 8% a year. Because interest rate did actually go to 6 to 7%. Actually, a lot of people, the young people, didn't realize they're now over leveraging buying property, right? Because the interest rate is very low for a long period of time. Actually, this is an abnormal interest rate. So there's once upon a time the interest rate is. I remember in the 1970s. Of course, I tracked back. During the oil shock crisis, the interest rate actually hit as high as 14%.
Wow.
That one, a lot of people put money in the bank. Okay.
That one can put lah.
That we call hyperinflation. It's quite a different scenario. But the key thing is when the interest rate now is very low, if you put your money in the fixed deposit, there's nothing wrong, okay? But you are eroding the value of your money over time. Okay? I cannot say that putting fixed deposit is wrong, but I just say that it depends on where you are right now. Let's say you are already having a certain level of wealth. Let's say, I don't know, maybe I take an example, let's say $100 million. So maybe at your stage, right? Okay, if you are in this stage right now, very important for you is wealth preservation. You want to preserve your wealth. So you don't want to actually subject to the volatility of the price. So maybe you want to put it in the fixed deposit, or you want to buy a bond, example. Nothing wrong, okay? But if you're young, you are in 20s, you are in 30s, okay? You are still working toward your financial freedom, it's not advisable to put in fixed deposit. Because over long term, you will lose out. Yeah, you'll definitely lose out.
Okay.
Yeah.
So if that's the case, then what should first-time value investors take note of?
As a first-time person to invest, first, please actually read books. Not necessarily my books, okay? No, but read any books that you can grab hold of and actually on investing, value investing. Seek out mentors. Talk to actually people who have been successful with a track record. I think the key thing is track record. A lot of people have theories, but they don't have track records, right? When I say track records, they must have at least 5 to 10 years track record, so that to prove their theory work, right? Then the third is actually, now is a very good time to buy stock, to practice equity investing, because why? Singapore Stock Exchange now have a minimum lot size of 100 shares. So I give example. What's the advantage of actually starting right now? Is this? The lowest share price per share right now in SGX, they have a rule already. It's 20 cents per share soon. So minimum you must 20 cents per share, your share price. So if you buy 100 share, it's $20. So you plus a commission of $24 to give broker, it's $44. So how many of you here have $44? Please raise your hand.
Sure have lah.
Okay, because some of you don't have, must go and see your MP. Okay. Yeah. So startup capital is very low. So it's for you to actually experience it, the process of it. But if you invest in property, nothing wrong. The commitment is very high, right? You must have certain form of saving, very high. So equity investing allows you to have low startup capital. Second is flexibility. I give one example. Let's say, example, if I actually buy, let's say, 1,000 shares of this particular company. Let's say I need money urgently. I can decide to sell away 500 shares away. I still keep 500 shares. So I can actually cash out some and still can keep some. Or another thing is, let's say if I invest in equity, the share price double. So I can take back my capital and leave my profit inside there. So basically I have no risk, right? But in the area of property, okay, example, let's say you only can buy one property. Let's say you need money urgently. Can you sell the toilet away? Can or not? If you can, you tell me which property I also want to buy. So you can't. So the flexibility is not so quite there in that sense. The third is actually the ease of investing in and out. Give example. Let's say if I want to buy equity, right? If I know, like do my homework, I just need to log on in the online portal. I click buy, I buy already. I just pay a commission of $24. Gao ting, right? So if I think, I make mistake. Okay, I read something wrong there. I make a mistake. So let's say I want to sell away this stock. I just sell. I pay a commission of $24. That's it. But property investing have a slight challenge. The duration is longer because you have to deal with different people, like let's say agent, you have to deal with lawyers, you have to deal with accountant, then a lot of tax to pay. Correct or not?
Correct.
So there's not so much so-called the ease of transaction is more troublesome in that sense. But there's an advantage of property. The strong advantage of property is actually leverage, because you can borrow money and your return, because you borrow, return also higher. But be careful, leverage is a double-edged sword. You can make money a lot quite fast, but you also can lose money.
Yeah.
Just ask those who bought property in actually mid-2013 now. Because District 9, 10, 11, 12, Sentosa Cove, you're going to ask those who bought the 4.8 million, then Lelong at 2.8 million, you ask them, property make you money? But you see, if you make a mistake in property, the lesson is going to be very painful. And it suck up the cash flow. It's like a vampire, vampire? Every month suck blood one. But having said that, don't get me wrong, I invest in property. I also invest, I also do co-development on property. The key message, it doesn't matter what you buy, whether equity or property, you need to know how to actually buy them under value. Yeah, so that's the key thing.
With that, right, as a value investor, there must be many common mistakes that I've made.
Yes.
Then what is one that you have made? Oh, a lot.
One.
Well, you owe means a lot.
Okay. One common mistake I have is I move outside the circle of my competence. So there's one thing that actually to minimize my risk, that's how I say is we invest in something that we know, we're very familiar with. So I give an example. I used to invest in one shipping company, and I thought I know the shipping industry, but actually I don't. Okay? So that is really outside of my circle of competence. And you know what's the best part? After I make one mistake, right, I invest another shipping company. And also lost money.
So that's your second mistake.
I think I can go to world record already. You know, one bitten, twice try, twice bitten, never try. So I don't think I will touch shipping company for a long time because that's not within my circle of competence. So I do make that mistake. But the good thing here is, out of 10 companies I invest in, right, using value investing method, 8 make very good return, 1 break even, 1 lost money. So overall, make very good money.
How do you ensure that that will happen?
Certain diversification. That means we don't put all the egg in one basket. That means we take our investment, right, we break it into minimum, we hold it in about 5 to especially 10 companies. Yeah, which I will share with you. But of course, if the company is yours, that means you started the company, you're the founder, and it's listed. Of course, you know the business very well, you can focus all into it. Yeah.
So with that, right, if the share price goes up as a value investor, will you sell it or?
Okay, very good.
Means got one more thing to say.
A lot of people ask me this question. They can. Value investing, is it like you buy already, you don't sell one? Then you don't sell to make money. Right? Warren Buffett buy, never sell, So let me explain this. The logic. Value investing doesn't mean you buy, you never sell. Value investing basically means you want to buy something worth $1 and only 50 cents at a discount. But I use this analogy that maybe hopefully you understand. Let's say one morning you wake up, heavy rain, raining cat, dog and cat, and you decided to buy a goose. You know goose? Goose, So you go to the market, and because it's raining heavily, nobody go to the market. You're the only buyer, and there are a lot of sellers inside the market. So a lot of goose stall down there. So you walk into the market, and suddenly everybody turn to attention to you, because you're the only buyer. So you go to one particular store, and because you went through a training, say how to pick a golden goose. You went through an extensive training, so, and you know how to see goose. Certain goose can lay egg regularly. So you saw this particular goose, because from the backside or the way the goose walk, this goose very fertile one, 可以生的, So you pick up the goose, and you say, wow, this goose no steroid one, kampong goose, master very strong. So then after that, you look into the goose eyes, the goose tell you, I'm a good goose. That's called management. Then you put on a goose, you pretend you're not interested, you ask the seller, hey boss, how much are you selling for a goose? The boss said, you know what, today business very bad, Since you're the first customer, okay lah, normally I sell for $5, today I sell it for $1. And because you are trained, you know this goose can lay egg regularly, and each egg you can sell for 30 cents, So you ask the boss, okay, $1 you give quickly. Okay, then you ask again, got any more this kind of goose? The boss said, don't have, only one already. Okay, then you take this goose, you bring back home. And the beautiful thing about this goose is you bring back to a corner of your house that you don't need to go often. You don't even need to feed the goose food, you don't even need to feed water. And you don't need to bring the goose out for a walk, The goose don't disturb you, will sit at the corner of the house, every day basically do this. Whack, 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 and become what? Bigger and bigger, The only thing you need to do every 3 months is go to if you want, go to the corner of the house and actually talk to the goose. Because every 3 months the goose will come out with a paper out of the mouth. It's called quarterly report. All listed company got quarterly report. So you take a look at the quarterly report, you look, this goose, the fat, no cholesterol level normal, no
blood pressure
no blood pressure very good, no flu, everything very good. Every 3 months it will lay a
golden egg.
And this egg can hatch another goose. So my question to you is this: if you have this goose, right, would you want to kill it?
So that's why you'll hold it.
But most people will, no? Most people, every day they'll go to that goose and then take a look. Wow, today heavy by 10 grams. Maybe it's time to to have the goose meat. In Chinese, it's called 杀鸡取卵，实在愚蠢。
Well, that one I cannot translate. I really don't know.
That means you kill the goose just to actually have the egg lah. You don't need what. If the goose is alive, you just continue to actually to lay eggs. A lot of my good investment return, right, later I will show you, is company I hold for 6-7 years, invested, I give one example, Singapore Stock Exchange. Bought it in 2003 at $1.60, hold it all the way to 2007, sold it at about $8. Okay or not?
Okay.
Okay. And many others, later I'll show you lah. Yeah.
Okay, so since you are going to show us, right? So
Hey, by the way, I really love the participation that you have now. Give yourself a big round of applause. Thank you.
so since we are going to go through
Yeah.
some case studies, is it? You want to talk to them about this first?
I want to summarize that's why I use the whole concept lah. It's called the 3R concept. Basically, when we look at before invest, right, we look at the business model. The business model itself, is it sustainable? Does the business model have a comparative advantage? Then next, we look at the management. It must be the right management. The management must be aligned with the shareholder. Because business is run by people, right? So next is actually, then we go into actually valuation versus price. That means you want to buy something worth $1 when the market gives us that a discount.
Okay.
Yeah.
So for that, right, what kind of knowledge should anybody need if they want to start investing? What are some basic knowledge?
Oh, basic knowledge. Actually, as long as you're a consumer, that means you consume something like that in your daily life. That means you're not a monk. You know, monk and people stay in the cave, then they meditate. You see Wu-Zhen, they want to have anything. That means detachment. That one I cannot help you. But if you're a consumer, you consume something every day, you can become a very good value investor. Very surprisingly. In fact, over the last 6 years, right, we discover women make very good value investor. Extremely good value investor. I'm not being biased. Okay? I'm not saying a gentleman cannot. Gentlemen can. It's just that gentlemen, a lot of us are overconfident. So we tend to ignore certain things. But ladies are more careful. Ladies are like, they are more careful and they are more contented in a sense. And also another reason is because women do more shopping. Yeah, because you do more shopping, grocery shopping, you know what is moving in the market and what not moving. Yeah. You know what? Men, you ask them to do shopping, they can't even differentiate the salt. You ask them to buy sea salt and normal salt, they say got different. Some men
salt.
Yeah.
So you mentioned that we should only invest with markets that we are familiar with,
Yeah.
right?
Yeah.
So what is some markets that you think most Singaporeans are familiar with?
Singapore market, lor. Okay. Let me illustrate. When you say this, is very important. I went to see a dentist a few years ago at Tanjong Pagar. So this is the first time I see the dentist. So the dentist, very interesting, no? He asked me, because first time he see me, and because dentists also very nice people. They if they notice that you are uncomfortable with the tool, they will talk to you, smooth down your tension, right? So then this particular dentist asked me, say, hey, Mr. Chee, what do you do in your job? I said, I'm an investor. I regret saying it, no? I tell you why. Because he said, wow, I also investor. I said, in my mind, I was like, oh gosh, this is going to be a good session. You know why? Because throughout the 20 minutes, you make a guess, who do the most talking? Me. How can I talk? The dentist. Because I can only open my mouth. Then the dentist do the cleaning process, then he talk, right? So he was telling me that, wow, Mr. Chee, you know what? I've been investing in this oil and gas company. They have a concession right in Myanmar. And if they hit the jackpot, they find oil in this concession. I tell you, the share price will shoot up, You know, in my mind, when he was telling me all this, you know what I say? I say, Dr. So-and-so, you know, the only thing you have in common with an oil and gas company is both of you drill, The oil and gas company drill big things, you drill small things, correct? That's the only thing you have in common, no? But never once, the dentist tell me, the chair that I'm sitting on is manufactured by a US MNC, listed. Never once he tell me the light that he used to shine on my face is actually, the light bulb is produced by Philips. Never once he tell me the filler that he used to fill my teeth is actually supplied by a pharmaceutical company in US. Never once he tell me the glove he used that actually in the process is actually produced by a company that I invested in. It's called Hataliga. It's a company listed in Malaysia. But he actually traveled 10,000 miles to tell me oil and gas. So invest in what you know. Invest in territory. You know something, right?
You can find something to invest in.
I give you an example. How many of you here eat bread? Bread. 吃面包 bread. How many of you actually frequent Food Republic? 鼎泰丰 Toast Box. Sir, you don't eat outside one.
Hey, he said no already.
Whatever I ask, you never raise your hand. They earn your money very difficult. Okay.
So this one cannot.
Yeah. Sorry? Cup noodles and instant noodles. But the key thing is, you know all these brands I mentioned is actually owned by Bread Talk. They're listed. Right? And it's just across the street, the HQ. So you consume something, you know something, you know about that business. You should know about the business.
So with that, I want to ask, how do you know when a bull or bear market is coming?
Wow.
Can
Like,
tell or not?
How many of you want to know what will happen tomorrow stock market? What will happen? Please raise your hand.
What's that? You see, all basic.
No, I see your hand. Good. Tomorrow stock market at 9 a.m. When you open, you happen three things. Either the stock market go up, go down, or go sideways. Yeah. So the answer is, okay, for us, we don't predict the market trend. We don't need to. So how do I know whether the bull market is coming? When most of the things are overvalued. Okay?
For example?
When you see people overpaying things that don't have a sustainable business model.
Okay.
This is on the record, okay? Personally, I feel that the tech industry, certain tech companies are overvalued. Why now? You just have an idea, you just go to the venture capitalists, they raise a lot of fund, but they have no revenue, no net profit model. So I felt that sector is particularly, I'm very concerned. Okay, very, very published, overvalued. There's also a scenario where actually the market will be, it will create huge liquidity into the market, is when the interest rate is very low. When the interest rate is extremely low for a long period of time, you see money need to go somewhere and look for a return one.
Yeah.
So they either look into real estate or look at in equity.
Equities.
Yeah. So how do I know whether it's bear market? Very simple. You go and buy newspaper, you open up, you see a lot of red heading. They will tell you market crash. Every page you open, market crash. Open it, market crash. You know it's a bear market.
So that's the only way to know.
Then you go to the street, people say, you tell them about stock investing. Okay, Paul, cannot touch bear market.
Okay, so there are so many listed companies everywhere, right?
Yeah.
Then how do I pick which one should I invest in, or like what are some key factors to finding an undervalued stock?
Good. So I think before I actually share with you the key factor of actually finding undervalued stock, I want to actually highlight this process. A lot of people actually go and buy books. I give an example. I have people coming to me and say, Ken, value investing don't work. I say, why don't work? I say, because I'm an accountant. My mother is a CFA. My father is a CFO. My husband or boyfriend is actually an analyst. Whole day long we study numbers. We study about valuation. How come my whole family still lose money? Investing? Now, the key thing here is, I want to highlight is, this process is in order one. We must look at the business model and the management first, because if the business model and management is right, the number will turn out right. I will show you in a while. But a lot of people, they go straight into numbers. So they go and buy books and read something called P ratio. As long as P ratio is low, you can buy. They look at price to book, things like this. They just look at the number. So you just look at number, nothing wrong. Okay, but you must buy a lot of companies to ensure that actually, because a lot of them don't turn out well. Because a lot of them will be what we call value trap. They might seems to be cheap, but actually they're cheap for a reason. Because the business model maybe is not strong, or the management couldn't actually generate a good return for shareholders. So that's why the price is cheap. So look at the business model management, and this come to actually my case study to showcase.
Okay.
Yeah.
You want to talk about your case study?
Yeah. So this one I must highlight first. I want to show you one example that we don't look at chart, we don't really look at market, we invest, we sleep and make money lah. Can or not? So I want to see a show of hand. How many of you actually drive here? You have a driving license? Okay. How many of you own a car? Okay. Sir, how is your car?
4 years.
Oh, thank you so much. Definitely my customer. Give me a big round of applause, come on. Okay. So you verify for me, okay, whether this is true or not. In Singapore, right, as long as your car is 3 years old, 5 years old, 7 years old, and 9 years old, and more than 10 years old, you receive this letter from LTA. Basically, the LTA will ask you to send your car for what? Oh, you also receive it, So we have the same government, Okay. So very simple, Basically, they tell you, look here, let me read, Please note that it's an offense under the Road Traffic Act for a person who cause or permit to be used a motor vehicle for which there's no inspection certificate. Cut a long story short, the government says send your car for inspection, right? And the government very nice, At the back of the letter, give you option, Actually, no option one. So at the back, they don't tell you where to go send for inspection. You got choice one. So let's take a look. There are 3 companies you can send it to. First, Vicom. Vicom have 5 outlets. We have FTA Inspection Private Limited, 2 outlets. JIC Inspection Services Private Limited, 2 outlets. So total, how many outlets are there in Singapore? 9 outlets, right? Let me show you something why I said no choice. Because Vicom owns 76% of this company called JIC Inspection Services. Out of 9 outlets, they own 7 outlets. And not only that, these 2 outlets, they inspect mainly army vehicles. So, got choice or not?
Not much.
So, let's take a look at the business model. First, this business is by law one. That means, I don't know about you, I'm a very law-abiding citizen in Singapore. Government asks me to turn left, I turn left. Government asks me to turn right, I turn right. Government asks me to jump, I ask how high. Right? Okay, so when the government send us things to actually do, we better jolly well do it. Because if we don't do, they fine us. And if we don't pay a fine, they jail us.
Correct.
But Malaysia different. Malaysia, the longer you delay the fine, they give you a discount.
That's true. Okay, moving on.
If you appreciate a joke, give me a big round of applause. Okay. And it's owned by Comfort Delgro. 69%, Comfort Delgro owns 69% of Vicom. So basically, it's very simple. Okay, if you don't send your car for inspection, at least Comfort Delgro will send their taxi for inspection. Agree or not? And they have 20,000 taxis running on the road. Okay, and this business not easy to do, no? It's not suka. You happy, you can start this business, because this business requires land. So Singapore is a very small area, it's an island. And this business requires a sizable land to do inspection, because you need to inspect buses, motor vehicle, whatever vehicle. Okay, so, and let's take a look at actually the comparative advantage. Don't believe what I say, look at the facts. Where's the pointer? Is this the center point?
Yeah, that's right.
This number, okay, is the total number that actually the total vehicle Vicom inspect every year. So you can get this number from their annual report one. Free information, no need pay one. Okay? This number, you go to government website, the Land Transport Authority, you also get this number. This is the total vehicle being inspected in Singapore as a country. So you put these 2 numbers together, how many percent market share do they have?
70.
How many percent? 70 over, right? Ladies and gentlemen, I'm an entrepreneur. Some of you are entrepreneurs here. You have 16% market share. You are called a market leader. This guy has 70 over % market share. What do you call them? Monopoly. I call them dragon head. 龙头老大. Okay? So, and let's take a look. For this kind of business, right? No need rocket science one. Don't need to analyze too much one. I will show you using what you learn, using value investing knowledge, right? This is what you're able to do. So this video, right, is what happened, I said on the 18th of January in 2004, in a very big event.
2014.
2014, sorry. 2004. Okay, let me give you a context of this video. Back then, Vicom only have 9-month result. So you see, all the listed company, right, they every year, after 1 year, right, the financial year, they need to submit an annual report one. That means it's like a report card, like a student give report card like that. So, on the 9 month, just using the 9-month figure of Vicom, I'm able to actually fairly accurately okay, able to project what happened in their full 12-month result. Let's take a look. I can play here, right?
Yep, just click.
So let's take a look at actually their business. And why am I still so passionate about this model? You look at actually their revenue growth consistently. This is updated, 2012. I show you the 9-month figure for 2013. Okay? 9-month figure for 2013, the revenue is 78.7 million. The net profit, okay, for Viacom, progressively going up. 9 months figure for 2013 is 21.4 million. So now, interestingly, when we annualize it, taking this 9 months, it means this 9-month figure roughly is quite confirmed, although it's not audited. If I annualize the 12-month to 12-month figure for 2013, Viacom right now, the revenue should hit between 100 to 105 million right now.
How much?
100 to 105 million revenue. The net profit should hit about 28 million.
How much?
Right now. Right now, if you can. Okay? So
I pause here. So I said, using a 9-month figure, I project it to 12 months. So that means I don't know the last 3 months actual result one. So I project it, revenue is about 100 to 105 million, net profit is about 28 million, right? So can we move on already?
Can?
Can already, right? Let's take a look actually, okay, about 3 weeks later, when Viacom announced their audited result, okay, what is their revenue? 100 and?
Almost 105.
Almost 105 lah. Not too bad lah. I think I deserve a small round of applause lah. Let's take a look at net profit. How much is net profit? 28 million. Also can give me a bit of applause. Then I can see some of you look say, "Aiya, Ken, you lucky only what?" Let's see, I did it again. A year later, on 5th to 7th of December 2014, that means a year later, I used the same method, using a 9-month figure, project it to 12 months. Let's take a look. And I spoke during this on my training session, and one of my students took the video as a proof, right? Okay, so listen.
Revenue, I annualize it, it will come out to be financial year end 2014, it come to be about 106 million to 108 million.
How much?
That is actually the revenue. The net profit annualized for financial year end 2014 should come out to be 29 to 30 million dollars.
How much? 29 to 30 million,
Net annualized to the financial year end 2014 net profit figure. Okay, so double check on February 2015 on the financial report. See whether is it true. If true, please buy Ken Chee a lunch.
So basically, same thing. In December last year, I told my class, full class, but close to 100 of them, say, look, okay, in February, they're going to announce the financial report. But I tell you right now, this is my projected revenue net profit. And take a look, in February 2014, when they announced, February 2015, when they announced that this year, their result, what is the revenue?
108.
Just now I say 106 to 108, right?
Got applause or not?
What's the net profit? So now the key thing, wait, I don't think it's a cult group. I say, whoa, Ken, you got you can predict. No, I'm not. Now, it's not every business we can do it this way. But there are certain business model, because their competitive advantage is so strong, it's fairly quite easy to make certain projection. And because you have the knowledge, you will know certain things way before a lot of people will know one. And because we can make this projection, I can start to value back Viacom at that point in time. The price when the market sell me, is it overvalued, is it overpriced or underpriced? So let's take a look at their full 10 years record. What do you notice about the revenue?
Increasing.
Okay, if you don't know what's called revenue, never mind. Look at the line. Keep going what? Up, right? Okay, look at net profit. Keep going what? And the most interesting thing, I will show you this, the recession-proof business. No? Why recession-proof business? Look, in 08, 09, Lehman Brothers crisis, the worst crisis of a decade, you know. Net profit still go up. Then in 2011 and 2012, okay, where the 2013, I think they're having QE, don't know what an issue, net profit still go up. Then I cannot believe, no. I did a test myself, no. I called the LTA officer, I said, officer, If tomorrow, if Obama touch wood, got assassinated, Black Swan event, tomorrow do I still need to send my car for inspection? What do you think the LTA officer tell you? Yes. Huh? Yes. Sir, is this a joke? Give me a big round of applause, come on. Look at the cash flow generation. You see, business, if you're an entrepreneur, you know about cash flow. You know you generate cash flow, right? You take a look, actually, the CapEx. CapEx is the capital spending. That means it's like the money you need to spend every year to maintain the business one. Either you maintain or develop it. Viacom, except for 2010 and actually these 2.5 years, because they invested about $11 million to actually build a new building in Pandan Loop. If not, during the normal time, right, the capex spending is about $4 million on average. By spending $4 million a year to run their business, they can generate every year on an average of $35 million cash on operation. Okay, never mind, you don't understand. I repeat, I take out $5 million or $4 million to run the business. The business can generate $35 million cash. Good or not? Good. Because now you look at me and say, and what does this mean? It means that every year, after deducting their expenses, they left about $30 million. They don't know what to do. They say, wow, I got $30 million every year. Working on every year, every single year. And what do? Let's take a look at the net profit margin first. This is the sign of a very, very strong business because the net profit margin stay above 25%. No drama one. This is a sign that the competitor cannot come in. Right? Because the net profit margin stay very constant. Very good. And look at the expense ratio. Very constant. The revenue increase, the net profit increase, but the expenses stay constant. Good or not?
Good.
Good, right? Next, you look at the cash ratio. Cash ratio means if you don't understand and explain a bit, that means how much cash do they have to meet their immediate liability. Average company 0.5. Strong company 1. This company cash ratio is 3.26. What this means is they have so much cash, it flows from their nose, And how much debt do they have? How much debt do they have? Come on.
0.
Let me ask you, ladies and gentlemen. This kind of business you invest really, do you need to worry that today or tonight or tomorrow, the Federal Reserve in US increase the interest rate? No, right? Can the banker tomorrow and go there and tell them, hey, you know what? You owe money, pay up. Cannot. No. Can sleep peacefully at night, not this kind of business?
Yes.
Good. And what do they do with the cash? This is an example of a great management I like. Over the last 10 years, right, on an average, every $1 they earn, net profit, they give out minimum 50 cents as dividend. Good or not?
Good.
In 1 year, they make so much cash, they give out nearly 100% of net profit as dividend. Good or not?
Of course.
Good, right? This is a cash cow. Let's take a look. If you invested in Viacom in 2001 January at 50 cents per share, sorry, the most current one is $66.51. You dropped 3 cents, but doesn't matter. Okay, I didn't update because I don't have time to update after market closing. Okay, the ROI return is about 1,208%. Too little for you, And the compounding return is 20% year to year on an average of the last 13 years, 13 to 14 years. Every year 20%. Remember just now I put an Excel spreadsheet to say that you can compound 20%?
Correct.
Am I showing you this?
Yes.
And the best part is you look at the dividend. Total dividend collected back based on your original investment, you already collected back 322%, And this money, this return, I did not include the dividend, That means this is still inside there, profit. This one you really took back your capital and all extra come back. Good or not? Total return is 1,530% return. Clap lah.
Applause.
If you don't clap, you are telling me, okay, I do this every day, hello. Then you ask me, then of course you will ask me in watching this, Ken, you so smart. You invest in 2001 at 50 cents. No, I did not. I want to show you that actually a good business, if you know how to analyze it, even you don't invest early, right? I invest during 2007, May. Even before the Lehman Brothers crisis happened, I bought it at $1.70. My return here now so far is about 285% plus an 81% dividend, no? So it means if I hold for one more year for this company, right, I've collected back 100% my original capital back from this investment. The rest of money inside there are pure profit. Total return is 366% return. Okay or not?
Good.
Two things I need to highlight. First thing is this. Okay, I bought it in 2007. Until today, I'm still holding it. Because the goose are still laying the egg. Agree or not?
Correct.
I didn't kill the goose. Can you imagine if I bought at 170, then when the share price got up to $2, oh, you're my 20% increase. Then I lost out on all the dividend and actually the capital gain. That's one. Second, a lot of people keep telling me that, they are value investor, they like value investing. Then I ask them, how long do you hold your investment? They usually tell me 6 months, 3 months. I hold it for 8 years. This illustrates one point. Value investing work for a great business like that. Then you also ask me, hey, now share price very high already. Still can invest? How many have this question?
Then they have all the hands come out already.
Yeah. Okay. So to answer your question, allow me to bring you back. Can't imagine, imagine. Can you put your finger down your brain now? Okay. And imagine, I put in a time capsule right now. I bring you back all the way to 2007. Look, Wait, sorry, sorry. Yeah. I bring you back all the way to 2007. Okay. This point is the point that I bought Viacom. What do you notice about the chart? I bought it at the what? At the peak. What happened to the golden advice of buy low, sell high? Because when I bought this Viacom at 170 at the peak, I went to talk to my friend. No? My friend, a lot of them are traders. They use technical charting. They say, brother, don't do it. I say, why? He said, buy low, sell high. Why got buy at peak one? Now, nothing wrong. And someone they use all the indicators. They show me this is a sell signal. No, cannot buy one. It's a peak. Nothing wrong. Because they only know how to look at price. Because if you look just based on price alone, at 170 as compared to $1 last time, is it higher? Is it expensive?
Yes.
Yes. But what if I tell you when I bought Viacom at 170, I value this business easily at $4? So what this means is the business value is at $4. Now I'm buying it at 170. Am I still buying undervalue? Yes. That is the power of value investing, my friend. Because we have an additional edge over a lot of people out there because we know the value of stuff. Because if you only just based on price, you have only one indicator. But because we know the value, we have extra indicator. I hope you illustrate this. Then next, some people ask me, Ken, but every day I look at the paper, they tell me about stock market index, market go up, market go down. Should I be concerned? Let me answer this question in this manner. Let's take a look. The red line is STI index, the index that we see every day. The blue line is Viacom. These two lines, are they correlated? No. What do you realize about these two lines?
Very far away.
Very far away, right? So the point is this, a lot of people concerned, get themselves over worried and look at, wow, market crash, market go up, market crash, market go up. You know what? Don't bother. Just focus on those business you understand very well, okay? Just focus on the business that you understand very well, okay? And stay within the circle of competence. Because there are no correlated one. Good businesses will outperform the market by a long mile. Yeah.
But that being said, he is not making a recommendation to all of you to buy.
Yeah.
Like he said, if you buy, you earn money, it's your credit. If you buy, you lose money, also your credit. So don't take it as a recommendation. It's just his thought process and his thinking to let you know how you should think as a value investor.
Yeah.
Okay, so with that, right, I want to ask you, what are the lessons that you learned as an investor?
A lesson?
Over the years, what are some lessons that you learned?
Consistently learn. Just keep on learning. I think the value investing is a knowledge, right? Even all the way until it is a skill set you can age gracefully one. And it's very fair one. it's not a knowledge that actually disadvantage anybody. As long as you're normal average IQ, you can use calculator, you consume things, you can do value investing, and can do all the way into your retirement age. You still can do value investing. The longest survivor, the value investing that I know, the most senior one, is actually 110 years old. Still doing value investing. And value investing, I learned is the moment we do about value investing, it's not so much about just making money, it's about value of a person. That's very important. And let me give one example. Why I admire Warren Buffett so much is because he pledged 95% of his net worth to the Gates Foundation. And that I admire a lot. And I see a lot of trade in the value investor, a lot of value investor, because they really focus what is important about a person, just like how they focus what is important in a business. So that itself also means that value investor, a lot of us are very health conscious in that sense. Because if we live longer, right, we can compound longer. Correct, ma?
Must be healthy lah.
Must be healthy lah. Yeah.
So if those of you who are interested to know more about value investing, there is a logo under the screen here. It's called 8i, is their logo. If you click it, it will bring us to a value growth workshop, right?
Oh, this one, yeah.
Yeah, so what can they expect out of value growth workshop, and what is value growth workshop?
Okay, maybe I will actually introduce my
Colleague.
Colleague over to actually share a bit
Okay, Ken.
her experience on value investing and actually what value growth workshop all about.
Welcome.
Okay. Can we welcome Pauline, please? Thank you.
Hi, I'm Pauline. Let me introduce myself. I actually graduated from Ken's workshop, which is 5 years ago, 2010, in March 2010. And why I attended was because the time during the subprime credit crisis, my unit trust actually went down 40%. So that was really a big blow for me. And not only my money, but my family funds, is in there. And so it's also part of our retirement funds, which I actually invested for 10 years. So I was searching around what to do and had a chance to meet up with Ken, and Ken told me about value investing, and I attended the program. So after attending the program, of course, I've got quite good results having passive income, which I was never having passive income in my life. Why? Because I work as a public officer in the government service then. So that money, that passive income to me was really, really something for me to look forward to. And most importantly, with the system just now you have looked in, it's a very systematic process that I actually invested, and I sleep very soundly at night. Yeah, I don't need to worry, I can, when the market crashed, because after I actually learned about value investing, there was this thing called the Euro debt crisis. And so during the Euro debt crisis, when crisis happened, people shun away from the stock market again. I actually went in, and not only that, that was the part that really builds my confidence that I know what I'm doing. Yeah. Because there's a network. We had actually a forum with the graduates, and we talked about it, and I was very confident. I went in when the prices are really low, all right, and half a year later, I see all my dividends, all the passive income, and of course with the company reports growing, and they did very well, all right. The share price after that recovered, yeah, when the market also recovered. So that gives me the confidence. And so 1 year later, Ken invited me to join 8i, and right now I'm the GM of 8i Holdings, the general manager. Yeah, and I've been with 8i Holdings for the past 3 years, and I also wrote the book called Value Investing for Women. Yeah, so this is my whole learning journey process that I would like to share with each and individual, that anyone can learn. Why? Because I started off with someone working in the public service, know nothing about value investing and know nothing about investing at all. And today I can share a lot about investing and even write a book on it and getting really, really good results.
And you manage your husband's money right now?
Yes. yeah. So that's also, financing in a family is also very important. Yeah. And also today I've reached a status which I've got this signet ring. And if you want to find out what's in this signet ring, I will share with you more when you come for the Value Growth Workshop, all right? Because in the Value Growth Workshop, it's a one-day workshop which you can learn why we need to invest, how to do investment properly, and we also touch on something which is when to invest, which we don't really do it over here in this short 1 hour session. And that interactive session in our one full day workshop, we will share with you not only one, not two, but 3 or even more case studies. Yeah. So today you will learn about Vicom using the 3R concept. How to invest with the right business model, right management, at the right valuation versus price. On that day, we will share with you much more with 3 different case studies, not only the ones in Singapore, plus the one in Malaysia as well. So you get exposed to different case studies. And one of the case studies made me 200% within 3 years. And that company, just now Ken has shared with you, is something, or a product or service I believe many of you have used before. Yeah.
And I think the key thing here is we want to actually spread the knowledge of value investing to more people. And that's why we created one full day program. It's very affordable. It's only $20, 9 to 5 p.m. And we provide lunch, material, case study. I think it's a lot of value. Yeah. So if you're interested, those who are watching actually live right now, you just click on the link below and actually just purchase the ticket. Yeah.
So can I say that it's very undervalued since you are going to give lunch, then $20 only, then learn one full day. Not bad, right?
Yes.
Good value, right?
And do we have, yeah, correct. Certain materials, we will provide certain materials also.
So really undervalued, right?
Yeah,
So
very
it's a
undervalued.
good chance for all of you to go for it. So to end it all, we would like to thank everyone for watching and participating. We would also like to thank Ken especially and Pauline for taking the time to share with us. And Ken, you said that you have something for the sit-in audience.
Oh yes. Correct. Yes.
What are we? We are going to give away books for the sit-in audience.
Yes, correct.
Yes.
Okay. Give me a minute.
This book is actually a book that's written by Ken, and it's only published early this year. Okay, so because we have sold quite a number of pieces that we didn't even have a chance to go to the bookshop. Yeah. So if for those who would like to get the book called Value Investing for Beginners by Ken, you gotta wait for the next print. Yeah, which will be coming out in April.
Thank you.
Okay.
Okay, thank you very much. Thank you for coming. Thank you for your time. Thank you so much. Thank you for your time. Thank you so much. Thank you for your time. Thank you very much. Thank you for your time. Thank you. Thank you for your time.
When is our workshop? Our next workshop is on the 25th, right? 25th of April. Yes. 25th of April.
5 p.m. So for those of you watching, thank you so much for watching and thank you for tuning in. If you have any feedback or if you have anybody that you would like us to bring on, do email in at feedback@successlegacy.com. And yeah, we hope to see you again soon. Thank you.
Okay, see you.
Thank you.
Bye.